Right. I was, just going to come to that what happens to the US equity markets, what happens to this, move that you're seeing in China. What is your own reading, Gautam? And I think, the crux of it all is in the dollar index. If you track that, both the dollar index as well as the currency, that's the US dollar, what are the charts mapping now? Is there a reversal, and a solid one at that you foresee?
Well, there is too much happening externally and around the world, and we are now in a disconnected world. I've been doing this for almost 2 decades now, and we always moved hand in hand with the rest of the world. But you now have a scenario where the US is doing its own thing, Europe is doing its own thing, India is doing its own thing, and markets like China and Hong Kong and Singapore are doing its own thing. So don't look at external factors to understand Indian markets, because I think they're all quite disconnected, and everybody is just going out there doing their own job based on their own economy and their own earnings. Having said that, the two positives for India that I see is the dollar index and crude. I think dollar index could have topped out at the recent high of 109, and there is a high probability that it gradually goes down to a level of 100 and possibly below. If that happens, obviously the metals index, the sector, will be a big beneficiary, and it's going to be great for global equity markets. So that's one positive. Crude seems to be at a level of 65. I think once 65 breaks, there is a possibility of a $10 decline on crude, which will again be a very big trigger. And I think USD INR seems to have found some sort of a stability around 87, 88. So if that were to stay in a range, that's also going to be another positive for India. So I think there are global opportunities. It's not that India is the best market in the world or will be the best market in the world, but you cannot ignore Indian markets.
Well, certainly. But Gautam, one of the other connected sectors with the global markets, of course, is the IT space. What we are seeing is that from the September highs, Nifty IT index is already down over 12%. And even today, the stocks are hammered. But give us your take on the IT space. Do you believe that more correction could trickle in some of these heavy IT companies? And what's your overall view?
Well, IT and pharma seems to have lost their trend and lost their way to some extent in the recent past. Mind you, they've had fabulous run-ups in the last couple of years, and I think they're going to stay in correction mode for a few months now. Many of these stocks were very richly valued. I mean, a 40p, a 70p, a 60p was getting justified in the good days last year, in the good period last year. But as the correction happened, people realized that this is not sustainable. So I think IT and pharma are two sectors where one should stay away. I don't see them outperforming, and I think it's definitely on our ignore list. Do not indulge in bottom fishing as yet, because I think the price correction is not done with, and the time correction is still awaited. So keeping that in mind, IT, pharma, capital goods remain an avoid even now.
All right, IT, pharma and capital goods, stay away from these pockets. That's the take coming in from Gautam. But
if you like this video, then like, share and subscribe to ET Now.